Welcome back to the Deep Dive. Ready to dive into the world of Fintech, DeFi, and Web 3.0 across Asia.
Absolutely. The amount of news coming out of Asia is astounding.
Yeah, you gave me a ton of articles and reports this week, a lot to go over.
It's amazing to see the sheer breadth of activity, honestly, from regulatory shifts to major partnerships, AI innovations, and even metaverse developments. It seems like there's something happening in every corner of the tech and finance space.
Okay, well, let's unpack all of that. Where should we begin?
Well, why don't we start with DeFi and stablecoins? There was one partnership that particularly caught my eye this week.
Okay, which one?
Binance and Circle joining forces.
Yeah, that was big news. What are the implications of those two giants teaming up?
Well, it's not just about the two companies, right? It's about what their collaboration aims to achieve. They want to make USDC a global force, especially in regions where traditional banking is limited.
I see, so it's about expanding access to digital dollars.
Exactly. Imagine a world where sending digital dollars is as easy as sending a text message, regardless of where you are. That's the kind of impact this partnership could have.
That would be revolutionary, especially for emerging markets. Speaking of bridging traditional finance and crypto, what about this ORO platform? I read a bit about it, but can you give me the rundown?
Sure. ORO is trying to bring gold into the digital age, so to speak. They're combining the stability of gold with the flexibility of blockchain technology.
So how does it work?
It lets you own fractions of gold, without the hassle of physical storage or those really high fees that sometimes come with it. And here's the kicker. You can even stake your ORO tokens for potential yields.
It's like a digital gold vault right in your pocket. I like it. Okay, moving on. Ripple made headlines this week. They got approval from the NYDFS for something, right?
Yes. Ripple just got the green light to launch its own USD-backed stablecoin, RLUSD.
Wow, that's big news. Why is this so significant?
Think about it. Ripple is already a huge player in the space. Their entry into the stablecoin market could shake things up, especially with big players like Tether and PayPal already dominating.
It'll be interesting to see how the market dynamics shift.
Right. This could spark a wave of innovation and competition as we see more players enter the stablecoin arena.
Competition is always good for the consumer, I think. Okay, last but not least in the stablecoin world, the UAE is making moves.
The UAE is definitely aiming to position themselves as a global crypto hub.
I read about some recent developments there, but could you fill me in?
They approved Tether's USDT for use and announced the launch of their own Dirham-pegged stablecoin, AEcoin.
So they're really embracing this technology.
It seems so. These moves signal growing acceptance of stablecoins for everyday transactions, not just within the crypto space.
Yeah, it seems like the lines are blurring more and more. But with all this innovation comes the need for security. Kaspersky Labs released a report on crypto drainers. Apparently, there's been a massive spike in discussions about them on the dark web, like a 135% increase.
Unfortunately, that doesn't surprise me. As crypto gains popularity, cybercriminals are becoming more sophisticated.
What exactly are crypto drainers?
Think of them as malicious programs specifically designed to steal your crypto.
How do they do that?
Well, they often disguise themselves as something legitimate. It could be a phishing website that looks identical to a platform you use, a fake browser extension offering some kind of enhanced functionality, or even malicious software disguised as a harmless app.
So they trick you into giving up your private keys, basically.
Exactly. Once they have access, they can drain your crypto wallets. And with DeFi becoming so popular, crypto drainers are finding more and more targets.
It's like a digital Wild West out there.
Mm-hmm.
Thankfully, it seems like some companies are trying to combat these threats. I know we wanted to talk about Revolut Pay.
Revolut Pay is doing some interesting things. They're being proactive by implementing features like advanced KYC and fraud alerts, specifically designed to protect users from these types of scams.
That's good to hear. Security should be a top priority.
Absolutely. And it's not just the fintech companies. We're seeing some tech giants stepping up too.
Oh, yeah, like Google.
Google Cloud has partnered with Swift to develop a new system that will use AI and federated learning to detect fraudulent transactions in real time.
Wow, that's some next-level stuff.
Right. Imagine a global network constantly monitoring financial transactions to keep your money safe. It's a powerful idea.
It's like an army of digital guardians. I also read about Visa using AI to fight fraud.
They've managed to block a huge number of fraudulent transactions using AI. It shows just how vital AI is becoming in this constant battle against increasingly sophisticated attacks.
It's like an arms race, but with algorithms instead of weapons. Okay, let's switch gears and talk regulations. Hong Kong is sending mixed signals on crypto, wouldn't you say?
It does seem that way, yes.
What's going on over there?
Well, on one hand, they're cracking down on WorldCoin's data collection practices. They're citing privacy concerns. But on the other hand, they're embracing stablecoins with new legislation.
It sounds like they're trying to find a balance between fostering innovation and protecting user privacy.
Definitely a balancing act. Meanwhile, Australia is taking a different approach.
How so?
They're proposing stricter crypto oversight with a focus on anti-money laundering and counterterrorism financing measures.
Sounds like they're tightening the reins.
They're aiming for greater accountability and transparency in their crypto market. But then you have countries like Ukraine and India taking steps to embrace crypto.
Yeah, what's the latest there?
Ukraine has officially legalized crypto, which is huge. And India clarified its tax laws, stating that cryptocurrencies are now considered capital assets.
That's a big step toward legitimizing crypto in those countries.
Absolutely. These moves remove some uncertainty and pave the way for wider adoption. But speaking of uncertainty, remember El Salvador and their big Bitcoin experiment?
Yeah, whatever happened with that?
Well, they're actually scaling back their Bitcoin ambitions.
What happened?
They face pressure from the International Monetary Fund, and it seems they're rethinking their approach.
It's a reminder that integrating crypto into national economies is complex. There are bound to be challenges and unexpected consequences along the way. Okay, shifting gears, let's talk about some of the exciting fintech innovations happening in Asia. Vietnam and Cambodia are making some interesting moves.
They're trying to make cross-border payments a breeze. There's a new system in place that lets you pay for things in Cambodia directly using your Vietnamese mobile banking app.
That's amazing. It's like borders are disappearing when it comes to payments. I know Revolut is expanding into new areas as well.
Revolut just launched joint accounts in Singapore, specifically designed to help couples manage their shared finances.
So bill splitting and budget tracking features, things like that.
Exactly. They're trying to simplify the often complex world of shared finances for modern couples.
Very cool. What about business-focused innovations?
And International joined forces with SWIFT. This partnership is all about streamlining cross-border transactions for businesses, making them faster, cheaper, and more transparent.
That's a big deal, especially for companies operating in multiple countries. Any other interesting news on that front?
Oh, yeah. Apple Pay finally launched in Egypt.
Really? That's huge for Egypt's growing digital economy.
It is. This partnership with MasterCard and the Central Bank of Egypt marks a significant step towards a cashless society and greater financial inclusion in the region.
It's amazing how mobile payments are changing the game.
Yeah.
Okay, let's dive into the world of the metaverse, NFTs, and Web 3.0. There's always something interesting happening there.
It's a fast-moving space, for sure. What caught your eye?
Well, Binance teamed up with Cristiano Ronaldo to create some Forever Skills digital collectibles.
Right, using NFTs. This partnership is a prime example of how brands can leverage the power of NFTs to engage with fans and create new revenue streams. They offer exclusive content and experiences that you can't get anywhere else.
And fans love that sense of exclusivity and ownership. What about the pudgy penguins? I saw they made an interesting move.
They're not just cute penguins anymore. They launched their own token called PNGU on the Solana blockchain.
So they're aiming for something bigger than just an NFT collection.
They're creating a full-fledged ecosystem with potential for staking, governance, and integration into blockchain games.
Wow, it seems like NFT projects are becoming much more sophisticated. But not everything is sunshine and roses in the NFT world, is it?
Unfortunately not. CyberKongs is currently in a legal battle with the SEC. The SEC claims their NFTs are securities, which has caused a lot of debate in the industry.
That's a big deal. This case could have major ramifications for the future of blockchain gaming and how NFTs are regulated in general.
It's a very complex issue. We'll have to see how it all plays out. Speaking of security, you mentioned the rise of crypto drainers earlier. It's important to be vigilant in this space, and Chainalysis is taking steps to help.
What are they up to?
They're known for investigating blockchain crimes, but now they're shifting their focus to preventing them. They acquired a company called Hexagate to boost their security capabilities.
So they're essentially trying to build a more secure foundation for the Web3 world.
Exactly. It's an important step.
Well, we've covered a lot of ground in this first part of our deep dive. From the exciting world of DeFi and stablecoins to the ever-evolving regulatory landscape, fintech innovations, and the metaverse, It's clear that things are changing rapidly in Asia.
We've only scratched the surface. There are a lot of interesting reports that we need to discuss in more detail.
Sounds good to me. Let's keep exploring. Welcome back to the deep dive. I'm ready to keep exploring these reports and uncover some more insights.
Let's delve deeper into the European Banking Authority's report on tokenized deposits. You might be wondering how these differ from the traditional bank deposits you're familiar with.
Yes, I'm curious to learn more about that.
Essentially, tokenized deposits represent traditional bank deposits on a blockchain. They combine the security and stability of traditional banking with the efficiency, transparency, and programmability of blockchain technology. It's like having a digital representation of your fiat currency on a secure and transparent ledger.
That sounds like a significant step towards bridging the gap between traditional finance and the world of blockchain.
Precisely. Tokenized deposits could revolutionize how we manage and transfer money, particularly when it comes to cross-border payments and settlements. Imagine a world where you can send money across borders as easily and quickly as sending an email.
That would certainly simplify international transactions. Now, shifting gears to the world of Web3, we touched upon the ChatGPT project and its AI virtual machine framework. Can you shed some light on this for our listeners?
The ChatGPT AI VM framework is essentially a decentralized operating system for AI agents in the Web3 space. Think of it as a platform that empowers developers to create and deploy AI agents that can interact with smart contracts, manage DeFi portfolios, automate DAO governance, and so much more.
So it's like giving AI the ability to operate autonomously and securely within the decentralized world of Web3.
Exactly. And because it's decentralized, it removes the need for centralized intermediaries, making AI more accessible and affordable for developers and users alike. This could potentially unlock a wave of innovation in the Web3 space, as developers can now leverage the power of AI to create more sophisticated and intelligent applications.
That's fascinating. It seems like AI and blockchain technology are a powerful combination. But let's not forget about the importance of cybersecurity. We discussed the rise of crypto drainers earlier. Can you explain how these malicious programs work and what our listeners can do to protect themselves?
Crypto drainers are designed to steal cryptocurrency from unsuspecting users. Imagine them as digital pickpockets lurking in the shadows of the internet. They can take various forms, including phishing websites that mimic legitimate platforms, fake browser extensions that promise enhanced functionality, or malicious software disguised as harmless applications.
So they essentially trick users into giving up their private keys or login credentials, allowing attackers to drain their wallets.
That's right. And with the increasing popularity of DeFi, crypto drainers are becoming even more prevalent as they target users who interact with various DeFi protocols. This is why it's crucial to be extra vigilant and practice good cybersecurity hygiene.
What are some practical steps our listeners can take to safeguard their digital assets?
First and foremost, always use strong, unique passwords for your crypto accounts and enable two-factor authentication whenever possible. Think of it as adding an extra layer of security to your digital vault. Be cautious about clicking on links or downloading attachments from unknown sources. It's better to be safe than sorry. And when interacting with DeFi protocols, stick to reputable platforms with a proven track record of security.
Those are excellent tips. Now let's turn our attention to some more positive developments. We briefly mentioned the partnership between Crypto.com and Deutsche Bank to enhance corporate banking services in the Asia-Pacific region. Can you elaborate on this collaboration and its potential impact?
This partnership is a significant step towards bridging the gap between traditional finance and the crypto world. Crypto.com is leveraging Deutsche Bank's established infrastructure and expertise to offer fiat-to-crypto exchange services, cross-border trading, and other corporate banking solutions to its clients in the Asia-Pacific region. It's like opening a gateway for businesses to seamlessly integrate cryptocurrencies into their operations.
So it's making crypto more accessible and user-friendly for businesses, especially those that might have been hesitant to enter the market before.
Exactly. By partnering with a trusted and respected financial institution like Deutsche Bank, Crypto.com is building credibility and reducing the perceived risks associated with cryptocurrencies. This could significantly accelerate crypto adoption in the corporate world, particularly in the Asia-Pacific region, which is already a hotbed for crypto activity.
That's exciting. It seems like crypto is slowly but surely becoming a part of mainstream finance. Now, let's circle back to the legal battle between cyberkongs and the SEC. Can you explain the crux of this case and its potential implications for the Web3 gaming industry?
The Cyberkongs case hinges on the SEC's interpretation of NFTs as securities. The SEC argues that the ERC20 token associated with the Cyberkongs blockchain game should be considered a security because it was offered to investors with the expectation of profits derived from the efforts of others. Essentially, they're applying traditional securities regulations to a new and evolving technology.
That sounds like a gray area, as NFTs are a relatively new phenomenon and their regulatory status is still being debated.
Exactly. And this has created a lot of uncertainty and concern among developers and investors in the Web3 gaming space. They're unsure how to navigate these regulations and what implications they might have on their projects. This case could set a precedent for how NFTs and blockchain games are regulated in the future, potentially impacting the entire industry.
It's definitely a case to watch closely. The outcome could either stifle innovation or pave the way for more regulatory clarity and mainstream adoption. Now let's delve into some of the industry reports that provide deeper insights into these trends. We touched on the WEF's Net Zero Industry Tracker, which assesses the progress of hard-to-abate industries in achieving net zero emissions. Why is decarbonizing these industries such a challenge?
Decarbonizing industries like steel, cement, and aviation is a monumental task because their processes are inherently carbon-intensive. These processes are deeply ingrained in their operations, and finding alternative technologies or solutions that are both economically viable and scalable is incredibly challenging. It's not simply a matter of switching to renewable energy sources.
Yeah.
It requires a fundamental shift in how these industries operate.
It sounds like a complex puzzle with interconnected pieces. What does the WEF report suggest needs to happen to accelerate progress?
The report emphasizes the importance of collaboration between governments, businesses, and investors. Governments need to implement supportive policies and regulations that incentivize the adoption of cleaner technologies and practices. Businesses need to invest in research and development to find innovative solutions, and investors need to provide the necessary capital to support these efforts.
It sounds like a collective effort is required to achieve such an ambitious goal.
Absolutely. It requires a concerted effort from all stakeholders to overcome the challenges and drive progress towards a net zero future. It's a matter of shared responsibility for the sake of our planet and future generations.
Now, let's turn our attention to the Bank of England's report on the potential role of a retail CBDC in an increasingly digital economy. What are the driving forces behind central banks exploring CBDCs?
Central banks are grappling with the changing financial landscape. The decline in cash usage and the rise of digital payments are prompting them to reassess the future of money and how they can ensure its accessibility and security in the digital age. They want to ensure they remain relevant and adapt to the evolving needs of society.
So it's a matter of staying ahead of the curve and ensuring central banks continue to fulfill their role in a rapidly digitizing world.
Exactly. Another factor is the potential for CBDCs to enhance financial inclusion. By providing access to financial services for those who are currently unbanked or underbanked, CBDCs could empower individuals and communities, particularly in developing countries where access to traditional banking services is limited.
That's a compelling argument. It seems like CBDCs could be a powerful tool for social good. But what about the potential downsides?
There are legitimate concerns that need to be addressed. Privacy is a major one. If central banks have access to a vast amount of data on individuals' transactions, it raises questions about how that data will be used and protected. Cybersecurity is another concern. A CBDC system would need to be incredibly robust and secure to prevent hacking and fraud. And then there's the potential for disruption to existing financial systems. It's important to carefully consider all of these factors before implementing a CBDC.
It sounds like a delicate balancing act between harnessing the potential benefits of CBDCs while mitigating the risks. Now let's move on to the Cambridge Center for Alternative Finance's report on wholesale CBDCs, or WCBDCs. How do these differ from retail CBDCs?
Wholesale CBDCs are specifically designed for use in wholesale financial markets, primarily for interbank settlements and large value transactions. They're not intended for use by the general public for everyday purchases. Think of them as digital versions of central bank reserves that banks currently use to settle transactions with each other.
So it's like upgrading the infrastructure of the financial system to make it more efficient and secure.
Precisely. WCBDCs could streamline and expedite these settlements, reduce transaction costs, and improve the overall efficiency and transparency of wholesale financial markets. They could also facilitate cross-border payments, improve the settlement of securities transactions, and even support the development of new financial instruments and markets.
That's impressive. It sounds like WCBDCs have the potential to revolutionize the back end of the financial system. We've covered a lot of ground in this episode, exploring the latest trends in fintech, DeFi, and Web 3.0. From the rise of tokenized deposits and AI-powered applications to the ongoing debates about NFT regulation and the potential of CBDCs, the world of finance is undergoing a profound transformation.
It's an exciting and dynamic time to be witnessing these changes unfold. But as with any period of rapid innovation, it's important to approach these developments with both enthusiasm and a healthy dose of caution. We need to be mindful of the potential risks and challenges while embracing the opportunities for positive change.
I completely agree. It's been a fascinating journey so far, and I'm eager to continue exploring this transformative era in part 3 of our deep dive. We'll dive deeper into specific developments and their implications for you, our listener, and wrap up our exploration of this exciting and ever-evolving landscape. Stay tuned for part 3. Welcome back to the deep dive. As we wrap up our exploration of fintech, DeFi, and Web 3.0 across Asia, let's zoom in on a few key trends and stories that really illustrate the changing landscape.
Great idea. There's a lot to unpack, but what really stands out is the blurring of lines between traditional finance and the crypto world.
Yes, we saw several examples of this convergence in our previous discussions. What are some of the partnerships that highlight this trend?
The collaboration between Crypto.com and Deutsche Bank is a prime example. It goes beyond simply offering crypto services. It's about weaving them into the fabric of established financial systems.
It's like building bridges between two worlds that were once viewed as separate and even incompatible.
Precisely. And this integration is likely to accelerate as more traditional institutions recognize the potential of blockchain technology and digital assets. Remember, Ant International joining SWIFT's network interoperability program.
Oh yes, that was a big story. It signaled a shift towards a more interconnected financial system.
Absolutely. It highlights the growing need for seamless cross-border payments, and blockchain technology is playing a key role in achieving that. It has the potential to eliminate many of the inefficiencies and complexities that plague traditional cross-border payment systems.
That makes sense. And speaking of expanding access to financial services, what about Samsung Pay launching in Saudi Arabia? It's interesting to see mobile payment solutions gaining traction in a region that has traditionally relied heavily on cash.
It's a testament to the power of convenience and accessibility. Mobile payments are simply easier and more efficient for many people, and we're seeing that reflected in adoption rates globally. It's also a sign of how technology is breaking down geographical barriers and connecting the world in new and exciting ways.
It's like the world is becoming one giant interconnected marketplace. Now let's shift gears and talk about the metaverse and NFTs. We saw Binance partnering with Cristiano Ronaldo to launch those Forever Skills digital collectibles.
That partnership cleverly leverages Ronaldo's global star power to offer fans unique content and experiences through NFTs. It's a great illustration of how NFTs can bridge the gap between the physical and digital worlds and create new avenues for engagement and monetization.
It's like owning a piece of your favorite celebrity's legacy, but in the digital realm.
Exactly. And it's not just about static collectibles. NFTs are evolving to offer more interactive and dynamic experiences. Remember the pudgy penguins launching their own token?
Yes, those adorable penguins are becoming quite the Web 3.0 force.
Their move signals a shift towards building a complete ecosystem around their brand, with potential for staking, governance, and integration into blockchain games. It shows how NFT projects are maturing and focusing on creating long-term value and utility for their communities.
That's a great example of how innovation is constantly pushing the boundaries in the NFT space. But as we saw with the Cyberkongs case, the regulatory landscape is still catching up.
The Cyberkongs battle with the SEC highlights the uncertainty surrounding the classification and regulation of NFTs. It raises important questions about how traditional securities regulations apply to this emerging technology.
It's a crucial case to watch, as it could set a precedent for the entire Web3 gaming industry. The outcome could either hinder innovation or pave the way for greater regulatory clarity and mainstream adoption.
Exactly. The industry needs more guidance to navigate this complex landscape confidently. Now let's reflect on some of the key takeaways from those insightful industry reports.
Yes, those reports provided a wealth of information and analysis. What stood out to you as particularly important?
The BIS report on a proposed architecture for retail CBDCs really emphasized the complexity of designing and implementing a digital currency for mass adoption. It's not just about creating a digital token, it's about ensuring security, privacy, accessibility, and interoperability with existing financial systems.
It sounds like a massive undertaking with a lot of moving parts.
It is. The report highlighted the need for careful consideration of all these factors to ensure that a CBDC benefits society and doesn't inadvertently create new problems.
That makes sense. We also saw a strong emphasis on sustainability in many of the reports. What are your thoughts on this growing trend?
It's clear that sustainability is no longer just a feel-good initiative. It's becoming a core business imperative, particularly in the financial sector. Investors are demanding it, regulators are encouraging it, and businesses are realizing that sustainability and profitability are not mutually exclusive.
It's great to see this shift in mindset taking place.
Absolutely. And the reports from UNEP Finance Initiative, WWF, and the WEF all point towards a future where sustainability considerations are deeply integrated into financial decision-making. This is crucial for tackling global challenges like climate change and ensuring a healthy planet for future generations.
Speaking of global challenges and technological advancements, what about the reports focusing on AI and its role in the financial sector?
The reports from Deloitte and MAS highlighted both the immense potential and the potential risks associated with AI in finance. They stressed the importance of responsible and ethical development and deployment of AI, focusing on governance, oversight, and robust risk management systems.
It's like we're wielding a powerful tool that requires careful handling.
Exactly.
Yeah.
We need to be mindful of potential biases, unintended consequences, and the need for human oversight to ensure that AI is used for good and doesn't create new problems or exacerbate existing inequalities.
Those are all critical considerations as we navigate this era of rapid technological advancement.
Well, we've successfully navigated our deep dive into the world of fintech, DeFi, and Web 3.0 across Asia.
It's been a fascinating journey, filled with insights into the trends shaping the future of finance and technology.
What's the key takeaway for our listeners as we conclude this deep dive?
The financial landscape is undergoing a profound transformation, and it's crucial to stay informed and embrace the opportunities while being mindful of the risks. The future of finance is being written right now, and it's up to each of us to be active participants in shaping it.
Until next time, keep diving deep.